Hello and welcome to the channel. Today we're diving into the exciting world of day trading shares known as stocks in the US. Whether you're a complete beginner or looking to refine your skills, this video will cover the essentials to help you start trading successfully. Let's get started. First things first, what is day trading? Day trading involves buying and selling shares within the same trading day, aiming to profit from short-term price movements. It requires quick decision-making and a good understanding of the markets. Before you begin, it's crucial to have the right tools. You'll need a reliable trading platform, a fast internet connection, and a good broker. Research and choose a broker that offers low fees, a user-friendly interface, and excellent customer support. Next, let's talk about setting up your trading account. When choosing a broker, look for one with a strong reputation and low commission fees. Some popular US options include TD Ameritrade, E*Trade, and Robinhood. In the UK, consider Interactive Brokers and Interactive Investors. I will put some links in the description below. Make sure to understand their fee structures and available resources for traders. Now that you have your account set up, it's time to develop a trading strategy. Successful day traders use various strategies such as scalping, momentum trading, and swing trading. It's essential to find a strategy that suits your risk tolerance and trading style. Let's dive into some common strategies. Scalping. This involves making dozens or hundreds of trades in a day, aiming to make small profits on each trade. Scalpers look for highly liquid stocks and capitalize on small price movements. Momentum trading. Traders look for stocks moving significantly in one direction on high volume. They buy stocks showing an upward trend and sell them at a higher price, or short sell stocks showing a downward trend. Swing trading. While not strictly day trading, swing trading involves holding positions for several days to take advantage of expected price swings. It's crucial to practice and refine your strategy using a demo account before trading with real money. Risk management is key to successful day trading. Never risk more than you can afford to lose. A good rule of thumb is to risk no more than 1 to 2% of your trading capital on a single trade. This way, even if you encounter losses, you'll still have enough capital to continue trading. To help manage your risk, use stop-loss orders. A stop-loss order automatically sells your shares if the price drops to a certain level, limiting your potential losses. Similarly, use take-profit orders to lock in gains when the stock reaches a target price. Now, let's talk about some technical analysis tools that can aid in your trading decisions. Technical analysis involves analyzing price charts and using indicators to predict future price movements. Some popular indicators include moving averages, relative strength index, RSI, and Bollinger Bands. Practice using these tools on a demo account to get a feel for how they work and how they can improve your trading decisions. Finally, stay informed about market news and events. Economic data releases, earnings reports, and geopolitical events can all impact stock prices. Use financial news websites, economic calendars, and other resources to stay updated. To wrap up, day trading can be a profitable endeavor, but it requires dedication, practice, and a solid strategy. Start small, manage your risks, and continuously educate yourself. If you found this video helpful, please give it a thumbs up, subscribe to the channel, and hit the notification bell so you don't miss any future videos. Also, leave a comment below with any questions or topics you'd like me to cover next. Thanks for watching and happy trading.